Hello everyone, I hope you guys are having a wonderful day and making some really good trades, and let's get right into it. We can see that Bitcoin is currently back down to 27,000. We got a very nice little pop today and we popped up to as high as 27,600, and right now I am currently in a bit of a short position on Bitcoin. Again, I entered my short right around 27,400, as I believe that there is still some potential for some more downside for Bitcoin, or at the very least it may be a double bottom pattern, but we are going to have to follow up with that because right now Bitcoin is definitely struggling with that big dip that we saw last week. And right now on the weekly time frame, it is looking increasingly bearish with a 20 and a -5 on the dual band strength index. We have increasing red money flow on the weekly time frame on using Market Cipher, so things are looking pretty grim. I still have my primary target here for Bitcoin to potentially hit right around 25,200. And it's actually pretty funny because I had this upsloping trend line holding as support for quite a bit of time, and today we actually came back up and retested as resistance, and now we're starting to come back down. So if we do come back down and make a bullish divergence, then I am going to be longing right around 25,200. Okay, so that's going to be my long target for Bitcoin. At the moment, I'm short. I'm in the money. I'll keep you guys up to date on my positions. Markets are starting to roll over a little bit in the overnight, but nothing to really write home about. But what we want to see is a potential double bottom here, or at the very least a bullish divergence form if Bitcoin comes all the way back down to here. But again, that would be a pretty significant drop for Bitcoin. That would be around 6.5%. You might have to see maybe the traditional markets get a bit of a leg down, but again, the traditionals have been in a sideways range for over 10 days now, not doing anything at all. Again, we could probably take a look at the SPY just to show you guys, not the market since like May 5th hasn't done anything. It's just been sideways. And I mean, I would even go as far as saying like you haven't really done anything since like April 14, maybe the middle of the month of last month. So I'd say that we've been in a pretty tight range for over a month. If we did come back down and form this little W pattern, but this was like earnings season and FOMC, so this was obviously a period of high volatility. But overall, markets are just trending sideways right now, or at the very least floating towards the upside on extremely light volume as well. You guys can see on the daily time frame, we only traded 54 million shares today. Extremely light volume. So what do the markets do on extremely light volume? They tend to chop sideways or float up towards the upside, and I think that's what we're gonna see in the coming potential days and weeks as the debt ceiling, the big news event that everyone's looking at. In my opinion, there's like a 99% chance that it will be resolved, and there's like a 1 to 2% chance that it won't be resolved, because it would be insane that they don't resolve this debt ceiling issue. And I think the markets are just freaking out for no reason. I think we're gonna get a short-term pop on the resolution of this news, but ultimately I think we're gonna roll back down and we are going to roll over towards the downside. But again, we'll see how everything plays out. I've been obviously touting this for quite a bit of time, and yeah. I mean, moving on, let's take a look at Wave Edge here. We can see that Bitcoin actually has a green cross on the daily time frame. So that is looking very promising at the moment. However, the RSI has not bottomed to extremely oversold yet. It's very possible that we might see some more downside. Same thing for the 4-hour, and we got a red cross on the 4-hour. So we might see double bottom structure happen in the coming day or two. Daily time frame, again, we're green cross. You can see the MACD is starting to the momentum towards the downside is starting to slow a little bit, although you still have the potential to see some more downside. So please don't discount that. Now let's take a look at what the S&P did today. Again, extremely boring. Nothing happened, just chopped sideways. If you do actually a 50% retrace from the top, I actually did the retrace the other day, from the top to the low, you get a 50% retrace right here, right at 41.54, and that's kind of where the market's halted at the moment. and you're getting a lot of call option expiring right around 4,200. So my best guess is that this week is going to be a very sideways week, or a week towards the downside. We're going to make those call options essentially expire worthless and make a lot of people lose money, and then maybe we'll get a bounce back up next week, unless things get out of hand and the markets really start to break down this week. But I don't think so. I think we markets still got a chance to get a little bit of a pop towards the upside, at which point I will enter my big short, and I'll keep you guys up to date. For those of you who are gold members or stock members that get access to my stock trades, I'll let you guys know when I do that. Taking a look at the NASDAQ again, I still think we got a little bit more upside here left of the NASDAQ. Right around 13,581, I think the NASDAQ can float up to. And again, don't rush into shorting this market unless you plan on holding your shorts for quite a bit of time. But overall, I think the markets can float up a little bit more, maybe 2.5% more on the NASDAQ here. Let me do a 50% retrace for you guys as well. Let's see what we're gonna get from this pattern right here, and you can see that the NASDAQ, the 50% retrace is essentially right where I have my target at 13,581. It's at 13,600. So overall, I mean, pretty close. I'm going to be adding to some shorts as well towards the downside, and the chart just screams, a potential drop is coming, and historical patterns and historical data is showing that we are going to go into a recession, and the market is kind of discounting on how severe this recession is going to be. As they usually do, they're usually wrong about most things, and we'll use the inverse Jim Cramer as our guide. Well, I'm just kidding. Let's keep going, although Jim is wrong a lot of the time though. Let's keep going here. Let's take a look at the Russell 2000. We don't cover the Russell too much, but overall the Russell, I think if we the Russell or even to get a pop near 18,200 or 1,800, I'll be very interested into getting into a short position on the Russell 2000, as I believe it will start to break down significantly more than the other indices, that is full of regional banks, money-losing companies, thousands of money-losing companies, all garbage stocks, and eventually they're all going to start to collapse down. And when that does happen, the potential to make money in this index is extremely high. I'm probably going to be using the triple leverage short on the Russell 2000, so I'll keep you guys up to date on that. Now let's take a look at the bond yields. Again, bond yields not really doing much. Chopping sideways, probably waiting for a resolution of what the debt ceiling is going to do. DXY actually had a bit of a down day today, and you can see that gold had a bit of an up day as well, but pretty much flat, not too much price action there. I think that the DXY is eventually going to get another leg down towards maybe the $199 level, and then you might get another pop up towards the upside. And that'll be really bad for crypto, really bad for the traditional markets as well. But for the time being, what I want to see is maybe the DXY go a little bit higher and then start to come back down, and that'll be our last potential pop in the crypto markets. And then I think Bitcoin could get maybe as high as 35 to 38K, but I'll follow up with you. I'll follow up with that analysis later on. Then nothing has happened like that yet. Let's take a look at the Bitcoin hash ribbon, something I want to take a look at as well. It is an indicator for potential capitulation as well. So let's take a look here. There we go. The Bitcoin hash ribbons are starting to they're starting to get pretty close at the moment. You're not really seeing any crosses yet, but overall it has led to some potential capitulations as well. You guys can see when the hash ribbons cross, did they disappear? Oh no, they're just down there. I just got to reset the chart. We just reset it. Okay. So when we go over here back in 2018, you guys can see we got a hash ribbon cross, 50% drop in the markets. We got another one here, capitulation, cross, and then a 52%. Then we got one back in 2022 and 42% drop after that, right? And then we did get this one, but this one was right after the FTX crash. And this was we got the cross. We didn't really see any downside, and then we got the buy signal right back here. And then if you bought following the hash ribbon buy signal, then you'd be up 55% since you bought your BTC with the hash ribbon indicator. Anyways, let me take a look. What I wanted to show you guys is take a look at the S&P 500 on the weekly time frame. I know we covered it yesterday, but I wanted to take a look at it on the SPY because this one is on the ON the chart. But what I wanted to follow with was the SPY and the S&P 500 index. So right here we can see that we do have a red dot on the weekly time frame. It has not confirmed yet, so we'll see if it does confirm this week, and maybe we get a drop in the markets the following weeks after that. But overall, I think it's looking pretty grim for the markets, especially the Dow Jones right now. You actually have a lower momentum wave, still red money flow, and a red dot as well. So that doesn't look good at all. Taking a look at the Nasdaq. Nasdaq is probably the only one that looks strong at the moment as it keeps floating up towards the upside. -5 and a 15. So again, Nasdaq still looking very bullish, but again, things can take a turn for the worse very, very quickly. As you guys can probably tell, the Nasdaq can look very bullish one week, and then it can take a complete dive towards the downside. As you know, it's composed essentially of all tech stocks, so it's extremely reliant on the interest rates going down, and that's what the market's pricing in right now. But what they're discounting is the severity of the recession. So let's take a look at the QQQ. Nothing there, so QQQ is still looking bullish, but overall the SPY does not have a red dot yet. However, you are extremely close, like the S&P 500, but I'm probably going to go along with what the S&P 500 is showing and not the ETF. Anyways, I think that's enough for today. Oh, actually, let's cover natural gas. Natural gas had a wonderful day today, up another 5% on the day. These green crosses are playing out fantastically. Lots of buying, weekly time frame. Things are looking good for a potential rally. And the monthly candle is looking absolutely amazing at the moment. Very nice wick back up. What I want to see is the monthly close. Very nice. I want a big, nice monthly candle close. But, that's maybe I'm asking a lot for nat gas. Maybe a pump to $3.50 would be perfect. But we'll see how this month ends. I think nat gas is poised to get a very big rally, and it's starting to show signs of that right now. Taking a look at the UNG as well. Just take a look at the UNG. UNG is looking very nice as well. Look at that weekly, sorry, not the weekly, the monthly time frame. That candle is looking very bullish indeed. Nice little bottoming tail. Now I want to see some follow through. I'll see if anything kind of happens. Anyways, thanks for listening, guys. You guys have been awesome. We are almost at 25,000 subscribers. Once we get to there, we are going to do another giveaway for the gold members, the premium members inside the Discord, and the free members as well. Different prizes for everyone. Anyways, thanks for listening, guys. Love you all. Talk to you guys later. Peace.